after you get past, I believe, 4 units, it's no longer considered residential. It's considered commercial. You're automatically going into, commercial lending, commercial taxes, things like that. This is actually a good question from an investor. At what point does an investor know it's a good time to branch into multifamily?
Very good question.
Yeah, it is a good question. I don't think that there's really any point, to be quite honest. And it really depends on what level of multifamily you're actually referring to. But I feel like once you have a good grasp on how, a decent sized portfolio of single families or a couple rentals operate, so long as that multifamily doesn't have things like elevators, it doesn't have certain things like it doesn't qualify as like a mid to high rise, because when you start getting into like a mid to high rise type stuff, then like I said, you're dealing with elevators, you're dealing with certain other things that come with ownership of that scale of property. You're heavy structural stuff. You're dealing with different kind of roof structures sometimes. You're dealing with potentially balconies, and you're dealing like a lot of different things. Balconies that high up. And that's why I know this stuff, because number one, I was a president of a condo board with 220 units, for like 7 years. And then also, owning Canton Manor over there. It's a 6-story mid-rise that has an elevator. The condo building had elevators, and those are heavy. Those are heavy hitter, items, right? And you want to really make sure that you're ready for it. And I think rather than, are you ready based on the number of units? Are you ready based on the capital that you need to fix major issues? Also, are you ready based on the capital that you have that may need to, carry itself for maybe a couple months because you've got some heavy fucking costs coming up? So I don't think that's a question of how many units. I think when you're ready, it's more of a question like, can you afford it? That's what I think is the right answer, because these things can be learned. There's not much of a different. Yeah, there's not much of a difference in management. If you were to have like a
5-plex or 6-plex or something like that. Like two stories high.
If anything, it's an easier management model, right? Because it's all under one roof, right? It's you got a little bit of economies of scale. But when you start getting into like I said, mid to high rise stuff, even the garden stuff is easier because they're usually walk ups, and it's more of the heavy mechanical stuff, right? You'll get even on the garden units, you'll get the individualized HVAC units, right? Where a lot of these high-rise buildings, you'll either get those P-TECH units, and one of the issues that we're running into the P-TECH units in the Canton building is they're becoming a little bit obsolete, the ones that we've been used to getting. So now we have to find another sort.
P-TECH?
The P-TECHs are like those. You ever see those hotel style of air conditioners and heaters?
It's like a wall unit.
It's like a wall
on
unit,
the
but
exterior wall.
It's like a wall unit on the exterior wall, but it's not a window unit.
Yep, I know.
You know what I'm trying to say? There's like a sleeve. They look a little bit nicer. They're very common in hotel rooms.
Yeah.
Well, that's what I have in Canton Manor, right? That's also what we have. Actually, we don't have that in North Miami. We actually have little tiny individualized HVAC units in like this. I guess you would call it a closet, but it's not a closet. It's a holding unit for those units. But
could you do mini splits on like apartment buildings? Like a mini split in each unit?
So there's like a lot of bylaws against stuff like that. For like the look of them all on the outside of the building, right? They don't look that great. As you could fucking imagine, right? They're all sticking off the wall, right? So, but as I mentioned, it's more of a question of, are you financially strong enough to take down one of those properties that are large in scale, or, is this something that's going? Are you more so referring to like a 4-unit, 6-unit, 12-unit? And from my perspective, I would much rather own multiple 4 units than a 6-unit, a 5-unit, and even like an 8-unit or whatever the case is. The reason why is because after you get past, I believe, 4 units, it's no longer considered residential, it's considered commercial, you're automatically going into, commercial lending, commercial taxes, things like that. So the economies of scale of the unit density in only a couple more units over and above what be considered a residential unit is not worth it. You have to get that scale to make it worth it.
It's very interesting.
Yeah, you have to get that scale. Yeah. So it's more about, can you afford it going into multifamily, not about your experience, right?
I think another kind of follow-up question that I'd have that I think is kind of related that people would find super interesting is that if you were to like go back in time to literally day one, knowing everything that you know now, but starting with like $0. No, you have all the knowledge that you have right now. What would be kind of like your first step, and walk me through like a hypothetical timeline over the course of, let's say, 10 years. What would you buy first? What would you go in afterwards? And like, at what point would you transition from single families to like small multifamily, et cetera?
This is going to apply for only this market here locally where I live.
Yeah. Let's talk specifically to Windsor.
Yeah. I'd house hack first. I would. Is that the right term?
Yeah.
I'm not all privy to these fucking terms here.
Hacking is.
Yeah. So if I was starting out again, from scratch, I had no money to invest. I'm not a fan of using other people's money. Let's get that out of the way.
Let's say that you have enough for a down payment. Let's say you have enough for a down payment on like a 5% to get started in this market, like with these prices that we have, like not
just
back
right
in
now.
2008, like these prices, you have enough for a down payment on a 5%. So what would that be? Let's say, for example, let's say you have 50 grand.
Yeah.
50 grand saved up, and you have a job with a decent income that you can qualify for loans.
Yeah.
That's your stipulations.
I would find a fixer upper.
Yeah.
And I would do that as fast as possible, as multiple times throughout the next couple years. Whatever the limit is, I can't remember if they've changed it or not recently, but I believe you could flip your own primary residence every year. You will be met with a limit at some point. You can't just do this for the next 10 years. CRA will clamp down on you. I've known people that have thought that this is just a loophole that they can perpetually take advantage of. It's not. They will consider it a business eventually if they find out, right? You don't want to get in that position where they're finding out that you're doing it as a business and then they start looking into you and backtracking. That's a bad scenario.
Yeah.
But I would flip my primary residence to gain as much capital as humanly fucking possible. I'd save every dollar that I could from the income that I earn at that job. I'd pick up as many other shifts. I'd try to make as much more money as I possibly could to raise as much capital that I could to make that capital go even further in real estate investing. That's what I would do.
Okay, so then at what point in time would you then transition past short-term flips? And what would you transition into next?
I'd probably do the exact same thing that I did. And what I would do is I would hire the flip. And I say this only because I'd hire out the flip unless it was very light cosmetic. But in this market, it'd have to be more than light cosmetic work.
Yeah.
So you'd probably be opening up floor plans and things like that, but nothing crazy where you're dealing with like potentially structural, I would imagine. Maybe a little bit of structural with opening up maybe like a wall to open the floor plan up, but nothing crazy. So I'd hire it out. And the reason why I would hire it out is because I would be making more money on a per hour basis at my current position or with the current income at my other job than I would be able to, I guess, earn doing the flip myself,
right? Because
it would take me way too long. Does that make sense?
Yeah.
So I would do as much as I could on my own, either number one, doing, light stuff, painting, whatever, flooring, or depending on how much I would be able to save doing it myself, I would try to pick up as much extra work as I could, as I possibly could. So depending on what that hourly wage is, I'd have to try to figure out, okay, well, if I could get that work done in X amount of time, I would save X amount of dollars and work that out on a per hour basis. But if I'm making more money on a per hour basis at my job, I would hire that job out and then work more on a per hour basis. And the only reason why I'm saying that I would flip, even though in this kind of economy I disagree with flipping altogether, is because the end goal would be to raise enough capital to find properties like I'm currently trying to find right now in this economy, in this market, period. Mm-hmm. And those type of properties are oversized properties with, say, a single family home on it that either
oversized lots,
sorry. Yeah. Oversized lots that either, number one, I could add 2 more dwellings to because of that new bylaw coming out, okay? Or I could sever off the lot and put a semi. I could put something in the back. I could put ADUs somewhere. I could do stuff like that. But you need capital for development. Mm-hmm. Does that make sense? Mm-hmm. That's exactly what I would be doing. So I would be house hacking until I had enough capital to be doing those types of projects. That's exactly what I would be doing if I had to start now. And the reason why I would be doing that is because that's really what I'm planning on doing and what I am doing. I'm assembling a localized portfolio here of properties like that for when it's time, I can start to develop them. Mm-hmm. So, because right now the cost on a per unit basis on a single family home, it's just fucking expensive. Yeah. And I'm not saying that that's not the game plan, because I do believe real estate will continue to appreciate, but to build the portfolio like I did so fast, so quick, early on, had a lot to do with the price of real estate back then, but it was also a wild risk. Yeah. Right? I bought at the absolute shit lowest part of what this economy locally has seen in a long time. Mm-hmm. Now, the argument also is, well, if you take, for example, Marco, my buddy there, he always provides this argument where if I would have started in Toronto, even though prices were, 4 times as much as Windsor or 5 times as much as Windsor, I arguably would have I maybe have the same amount of real estate or maybe even a quarter less, but the values would have been substantially higher in terms of, net worth of the real estate or the value of the real estate portfolio. Mm-hmm. So I don't really know. I only know what I would do locally to Windsor. I don't know what the Toronto... I don't know if I were to pick myself up and put myself in Toronto back in 2008, what I would have done. Maybe I could have done it. I don't know. I wasn't in that localized area. But I could tell you, locally, that's what I'm focusing on. I'm also focusing on... and this is something that doesn't necessarily apply because this is higher level. I've acquired industrial property that allows for development down the road, and serious development where it's like a couple hundred condo buildings, right? Mm-hmm. Now that's, I bought the building, maybe 4 years ago, and that was about
properties like that. What do you think they're trading for? Like that exact one that you're referring to. What do you think that's trading for in this market?
So I bought that property for $850,000. I want to say 3 to 4 years ago on Tranby. Maybe not even. This was right before, maybe 3 to 4 years ago. This is when real estate residential was popping off, but industrial was not. Mm-hmm. And I knew as residential real estate was popping off, I knew people were going to start getting into industrial. And that's when I started going heavy into industrial because, as the economy was booming, people need to make stuff, and the places where you make stuff is in industrial buildings. Mm-hmm. And the returns for the residential was getting squeezed. So it's a natural progression. People are going to go where they make money. Mm-hmm. I just got it in ahead of the curve, right? So I ended up buying that property for $850,000. That property now is probably worth a little over $2 million within 3 to 4 years, maybe a little bit more, maybe 2.5, maybe 2.5 might be a stretch. It's on 3 acres in a residential area, very nice residential area. The building is about 20,000 square feet. I sold a property remember I sold that one on 42? Yeah. When was that? That was probably about 2 years ago now?
That was just before COVID, I feel like.
Yeah, just before COVID, right? Was it? No. Was it just before?
I feel like you sold it in February of 2020 or something like that.
Okay, so I sold that right before, maybe a year before the height of it. I sold that property for $2.2 million, and it was roughly about the same size as this property that we're talking about right now.
The land too?
About the land too, yeah. Land too, but in a way better area.
Yeah.
Like a substantially better area. So I would argue that the property would probably be worth $2.5 million. Yeah. So, but that's a high level goal or model that I'm taking advantage now of buying property with intrinsic value down the road.
So to kind of go back, go ahead. Sorry.
I was going to say, if you're a lower level investor kind of getting started, that's what I would do. I would work as much as possible. I would renovate properties that were your principal interest so that you're not getting taxed when you sell it. That's a big one. You're not getting hit with capital gains tax. You could take that capital, instead of giving it to the government, apply it to your next one, and just compound that amount of capital that you're earning there, and apply it eventually when you find a property that you could add unit density to. That's what I would do in this kind of market. Yeah.